This podcast is brought to you by the award-winning prop firm, Vandelinder.
And I was really trying to get over that hurdle of being a break-even trader where I was profitable 1 month. Like I was able to get funded. I was able to pass prop firm challenges. I would get a payout or two and then blow. And it took me a couple months to get the hang of it. Like after back testing it for a month, 2 months, I started to get pretty good at it. But I would say about 6 months into the strategy that I was really starting to nail it and become consistently profitable. So after back testing for a couple weeks, I pretty much knew that this strategy had something going on that I had never seen before. I was a drug addict and an alcoholic for basically 10 years of my life. And now it's been a couple of years that I've been sober. And I found that there's such a relationship between the type of personal growth you have to do as somebody who's in recovery compared to somebody who's trying to become a profitable trader.
Difference between your last paycheck at Amazon and your first payout on the funded account. What was the difference?
So at Amazon, I think I was doing around, I want to say 3,000 a month or a little over 3,000, like barely skating by. And my first payout was almost...
Episode 224. All right, folks, we've got Joe Caruso coming up here on the show. Now, Joe has got a fantastic trading story for you. In fact, he hasn't been trading that long, but the reason I got him on is because he is Derek Vandelinder's prodigy. So this guy has come out of nowhere and is doing better than Derek, who's been on the show for many years. It was only on just recently with this ridiculous 95% win rate. Joe's story is going to resonate with you. Trust me, there's so many key lessons in here that helped him find success that you're going to be able to benefit from as well. And then afterwards, we broke down Joe's strategy, or the strategy they use. And you also see MyFX book proof of not just where we left them off, but also updated till now. I think it's like almost 11 months worth of proof of their 95% win rate is still at 95%. So you're going to get to see that in the video. Do remember, hit subscribe, like, and click on that notifications bell and select all to be notified when that one drops. All right, folks, one more thing before we get into it. We've got something hitting the Telegram channel here on Trading Nut. So if you're not in there, jump in there now. Something big is coming your way on the Trading Nut show, so please stay tuned for that. Head over to Telegram, get yourself signed up so you don't miss it. Right, let's hear from my sponsor and then get on with the show. Vandelinder is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So one thing that really sets Vandelinder apart is their no minimum trading days requirement on their challenge and verification stages. On top of that, traders who successfully pass the challenge and verification stages are eligible to receive a bonus payout of up to $30K on top of their funded stage profit split payout on performance. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more. All right, folks, here we are on Trading Nut. We've got Joe Caruso in the house all the way over there in Pennsylvania. Now, Joe is the, I suppose, the prodigy of Derek Vandelinder, who we've had on the show a number of times, and you would have seen his recent interview, or should I say charting work just recently. And I know these guys have been absolutely killing it this year and last year. So welcome to the show, Joe.
Thank you. It's a pleasure to be here. Especially being somebody who was a fan and seen so many, over the years. I was definitely like aspiring to get to this point, and then, fast forward 2 years and here I am.
Yeah, no, I think Derek actually said in his interview, or it wasn't really an interview, we're doing some charting, and he actually said that you were better than him in terms of how the approach. So that's something to be said, given the fact that he's been doing it for so long. So let's start off by hearing your story. How did you get into trading, and how's the journey been so far?
Yeah, so I knew nothing about trading whatsoever before the whole COVID pandemic. So really COVID happened, and then my brother got into stock trading and kind of told me about it. And I messed around with stocks a little bit, made a little bit of money doing that, a couple thousand, not even knowing what I was doing, just buying stuff because it was down 80% and then selling it when it went up. But that type of stuff doesn't really replicate itself on a weekly basis. So I found that it was a very slow process. And then I came across IML, or IM Mastery Academy, it's called now, through multi-level marketing. And I didn't really enjoy that too much. It kind of introduced me to trading. It definitely opened the door, and I learned initially binary options, but it's very hard to be profitable with binary options, I found, because the risk to reward factor kind of isn't there. You have to win with 70, 80%, even better sometimes, accuracy to make money. And then from that, I started to watch podcasts and dive deeper more into the traditional Forex market and people that were doing it. I came across your podcast and I started following people like Lambo Raul, Q Banks, and some of those other popular, Instagram traders. From there, it was so I started messing around. I wasn't a student of anybody's mentorship or anything like that. I was really just doing my own thing, picking up little pieces from here, learning support and resistance from one person, learning a couple indicators from another person. And it wasn't until FX Summit of last year that I had met Derek. So going into that, I just wanted to grow as a trader because I was pretty much at the break-even stage of trading, going into FX Summit. I went in with an open mind with the intention of, I'm going to try to learn, just keep an open mind, learn from whoever's speaking, try to meet like-minded people. And I was really trying to get over that hurdle of being a break-even trader where I was profitable 1 month. Like I was able to get funded. I was able to pass prop firm challenges. I would get a payout or two and then blow it. I was able to trade good for a month and a half and then, mess things up. So I was really trying to find what I was missing or what I could add to pretty much bridge the gap to profitability.
And that was all trading US 30, right? And you were scalping US 30. Yeah.
Like I followed people like Q Banks and people that were trading just indices. And it was very fast paced. It's not really the best thing to get introduced to right off the bat, because then you're always expecting that fast money.
Mm. And what time frame were you sort of mainly scalping on? Was it very low?
It was mostly between the 1 hour and the 5 minute.
Okay.
So I was using 1 hour for zones and then 5 minute pretty much for entry. But I was trading very support and resistance based and not many other confluences to go with it. So, my win rate wasn't usually better than like 50, 60%.
Yeah. Okay. And so on the FX Summit, funnily enough, I got invited to go along to that, but it was, we couldn't get out of the country at the time. That obviously was a game changer for you. And I mean, how did you manage to meet Derek and hit it off with him? What was the genesis there?
Yeah, so I encourage everybody to go to it, especially like this year. If you didn't go last year, go to it because it can be a life-changing event. Like if I look at how events changed in my life, I went to FX Summit. It's actually really funny because Derek almost didn't go to FX Summit. I know there was some stuff going on in his life and he almost didn't end up going at all. But it was just the way, it was almost like divine intervention. I went there. So when they have the expo where everybody is just at their own booth representing their company, you could just go up and talk to whoever you want. I saw there was big crowds of people by some of the bigger guys. And then I saw Derek didn't always have a big crowd of people. So I went over, saw who he was, what's he about? He told me he had that free YouTube course. This was like, I think he had just made that YouTube course that's out, that 25 video course that's free, which is, I recommend that for anybody. That was like amazing. And from the night that I had met him at FX Summit, that night I was already watching the videos. I was back testing. I think it was a Saturday too but I just remember like from that point on for like 3 solid months, I was back testing, watching his videos and messaging him with all these questions about the strategy. And he was actually getting back to me. So we were like working already at that point a little bit rather closely because I was constantly in touch with him.
And so when did things click? So you were obviously learning the strategy at some point, things you would have, I guess, had a good grasp of it. Derek answered enough of your questions. How did the first foray into it go? I mean, what was your first experience?
So after back testing for a couple of weeks, I pretty much knew that this strategy had something going on that I had never seen before. Now, as somebody who's only been in the market for, 2, maybe 3 years at this point, maybe that's not saying a whole lot, but it definitely stood out. And I was very quick to see how this strategy was very set in stone. Like I hadn't really come across anybody or any strategy that had such a defined, list of confluences for entry, an exact point of when you move your stop to break even, an exact rule for where's your first area of take partials, where's your take profit going to be, when you have to get out early if certain things are going against you. It was so clear cut and defined. And that was really what I was missing, was that disciplined set of rules for entry, break even, partials, take profit. Like everything was so clearly defined. And that was really the main thing that stood out to me. And it took me a couple months to get the hang of it. Like after back testing it for a month, 2 months, I started to get pretty good at it. But I would say about 6 months in to the strategy that I was really starting to nail it and become consistently profitable.
Okay. And so it is interesting to get that combination, because it's a high win rate, high reward, which is it shouldn't exist, right? It should not exist with mechanical in and out, partials, all that sort of stuff, rules. So it is a phenomenon in the whole like trading world. I mean, you don't get that very often. I mean, what were some of the things that you struggled with at the beginning in that first 6 months when it just, for whatever reason, it wasn't working, and how did you overcome those?
So it was really a matter of I was taking too many trades early on. I was taking everything that looked good. So the 4-hour time frame is the main time frame that Derek uses, and I pretty much adapted that as well. I was coming off of more of a scalping intraday trading and converting, or slowly progressing, I would say, to more of a swing trading style. So that in itself took me a while to get used to actually being in trades for more than just, a couple hours, holding trades for a couple days. And of course, the trading psychology, I feel like it's very hard to be profitable in your first year of trading, just because of the psychological lessons that you have to learn, as far as, the over leveraging, and, there is no 100% trade that, is going to work out that you can risk extra on. So it was about my second 2 years or 2.5 years since I started my journey, where everything started to click. 6 months of learning and practicing that new strategy of Derek's, that I really started to implement. And I started to be able to weed out the trades that would just end up being break even, because having a 90% win rate, or sometimes even higher, there's still some break evens in there, that still close out as, they close out maybe 5-10 pips in profit. It's basically a break even. But I started to learn how to even weed out some of those unnecessary trades that, if there's something going against the trade on the higher time frame, most of the time those trades don't always work out. They'll go 40-50 pips and then it comes back to break even. So
and what would you be seeing on like a higher time frame that would stop you from taking a trade?
So like a moving average going against me, or if I'm taking a shark fin on a 4-hour and then I hop onto a daily time frame, and there.
Do you want to just let the guys know what a shark fin is if they've missed the prior episodes?
Yeah, of course. So a shark fin, we use the TDI indicator for, and it's essentially when the RSI is either above the 75 or below the 25, and it comes out of the Bollinger Band that's on the TDI, and it essentially makes a shark fin. The exact same shape of a shark fin. So it's pretty easy to identify if you have it in front of you. But it's, in a sense, it's a form of oversold, overbought, extreme oversold, extreme overbought.
Okay. So back to the, so I think people have got it now. So back to the higher time frame giving you an out. So you want to filter out that trade. So you were saying if you see a shark fin on the 4-hour, was it?
If I'm entering on a 4-hour based on a shark fin at an area of confluence, and I go on the daily, and there's an area of structure that I see on the daily, or drawing a trend line that's pretty much in the way of my trade, things like that I didn't really notice early on, because early on I would stay on the 4-hour. When I saw a shark fin hit a moving average, either the 50, the 200, or the 800, I was pretty much jumping in. I was taking like every shark fin that I saw, and it's unbelievable that most of them actually play out, even if there's not a whole lot of confluence. But the ones that do have several things lining up, I mean, those are the ones that really run for a couple hundred pips.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
And it's funny because, like, I mean, I know Trendlines was the thing that Derek reached out to me about just recently, saying, "Hey, look, I want to show people how I do these trend lines." And I mean, I've had, and we said that in his show, so many guests come on and say, "Oh, trend lines don't work," that kind of thing. But the reality is, I mean, I use trend lines and they work fine. They work really good, in fact. And I mean, what sort of, I mean, how much, if you had to give a sort of percentage weighting on, the likes of using an indicator shark fin pattern with a trend line, what would you say are more powerful for you to look at, the trend line or the indicator or price action?
I would say I love the combination of all of them. That's a funny thing, because that's really what makes the best trade, is when you have all of those line up. I would put price action as probably the most important, and then the TDI being the second. And then I would say moving averages and trend lines following that. And then, Fibonacci extension, or retracement, that's kind of like the last area of confluence that I'll look to. But I won't specifically trade off of a fib retracement level, but I will trade off of a shark fin at a 200 moving average at an area of resistance. And if there's a trend line in there, that's even better. So we really look to merge as many confluences together. And I think for that reason, that's what makes the strategy and those trades have such high win rate, is you're getting, 4 or 5 different confluences. Maybe, you're using moving averages, trend lines, support resistance, Fibonacci retracement, TDI, and then we also use the multiple time frames. Like on a 4-hour, we'll always check what the daily looks like and what the weekly looks like.
Okay, and so what were the things in that first 6 months that I mean, you said looking at the higher time frames was one of them. Was there anything else that you sort of saw with some of the losses you may have taken that you were like, I could have avoided that because of XYZ?
Yeah, I say the most important thing was definitely the time frame correlation, because I was able to spot when things looked good on, to be able to notice if something is very oversold at resistance with the moving average there. Like, to be able to merge all that together wasn't too hard. It was more of, if the daily looks something, if it looks bearish on the daily and I'm looking to buy on the 4-hour, how it doesn't necessarily mesh together. Or if the weekly is very bearish, then I'm looking to buy on the 4-hour and realizing like that, why is this going against me? And then, I'd lose a trade, look at the weekly or the daily and say, there was a hidden divergence off the 50 moving average going against me. And here I was buying this little move that went 30, 40 pips. Meanwhile, it was in the middle of a 300 pip swing going against me.
Right. Yeah. Okay. So it's really getting that grasp on how the higher time frame or another time frame is affecting your current time frames trade, which is key and probably one of the more difficult things to get over, psychologically, because you've got to psychologically tell yourself, I've got to check all the time frames. I can't let leave any stone unturned, and B, understand how it sort of works in correlation to the time frame you're on, which is another thing that I think people kind of struggle with a bit. Now, what about if you had to sort of compare stats with that 6-month period where you were getting from, starting to doing well to the 6 months or 6 months plus onwards when you actually had cracked it? I mean, what do your stats look like if you had to break it down into like win percentages, average risk to reward, trades per week, that kind of thing?
So I had a free signal group that I was running from, I believe it was August or September up until December. Now, this was before I was working with Derek with Trader Society Academy. And in that group, I had about roughly an 80% win rate on the trades I was calling. Average risk to reward was probably about a 1 to 3. But then I noticed, since me and Derek have started doing Trader Society Academy, which has been since like the beginning of December, so the last 3 months, both of our win rates is between 90-95% pretty much.
I mean, like 80% and 1 to 3 is still pretty good, right? I mean, you can't complain about that. That is awesome. But I suppose the combined nature of both of you looking at trades is just a force that you can't be, you can't be beaten. Okay, and that's the risk to reward on that one. Did you say?
It's still about a 1 to 3 on average, because it really depends on. When I take partials, I usually take a third off out of the first area of confluence going against me. And then I'll usually take my second partials or most of the trade off at the take profit. But there are times I will leave a runner, for like even an extra bit. Like if I'm going with a higher time frame on trades like that, sometimes I'll even hold past the original take profit and hold like a little bit of a runner. But at that point, it's all risk-free, because we always move our stop loss to break even after a certain point. So most of these trades become risk-free relatively quick. And
so that runner, I mean, what percent would you leave on a runner? So if you're taking a third off at the start, bulk off for this TP level, what's the runner percentage on average?
I usually do a third, and a third.
Okay, all right. So it is a good chunk, right? Okay, but if that runner comes back and gets stopped out, you've trailed, the stop's higher than obviously break even, or you're going to get some money, or is it the runner's either going to run or not?
I'll still make sure the swap is covered, like the spread, the commission. So I'll still put it like 10, 20, even 30 pips, but I don't really trail it like 50 pips or anything major like that.
Yeah. Okay, cool. Now, what about like things, were you trading every day? What instruments, have they changed at all? So from the 6 months that you were, getting better, and then to the, going forward now?
Yeah, so previously I was definitely very heavy on US 30, just because that was what I had known for a solid year and a half. Almost most of my trading in this trading FX was very heavy on indices, where now it's completely mixed. We look at every single pair, the 3 major US indices. We look at the DAX, silver, gold. But the thing is, because these trades are so particular and so many things have to line up in order for a trade to be valid, we're still searching. If we add them all up, it's probably 35 or 40 instruments with all the pairs, all the indices, commodities. And there's still days that there's no trade that lines up, so it's things have to align a very certain way. But I think I've become more patient over time, because now I have the stats that prove I get paid to wait. It just doesn't pay to cut my win rate down and take all the trades that like look okay, that are kind of iffy.
Yeah. Which is another thing that like, I think is a big hurdle for people to go, I'm just, happily go through and miss every opportunity that could have worked out. And like, I mean, what I tend to do is I'll draw a line where I think that, I'd like to take this trade, but I'm not going to take it for these reasons. And then the next day or whatever, next candle, I'll go and check it and see, would it have worked? Oh, yeah, it did, or it didn't. And then you go, okay, well, there's a reason. Or it worked and it gave me like half an hour. And you're going, well, yeah, you would have made some money, but you would have probably just, given it all back, and you wouldn't have taken profit. So it's little tricks like that. Now, what about like your typical trading day? I mean, how do you structure it? What does it look like for you?
So I'm Eastern Standard Time. So for my time, I'm basically waking up at 6 o'clock every day, which is 3 hours after London Open. So I'm catching the middle of London, and I'm basically trading until London close around noon. And we do our live session for Traders Society Academy Monday through Thursday. And our trade session is running for about 4 hours. So I'm doing that from 9 till about 12 or 1 o'clock in the afternoon. Cool. So essentially I'm at the computer, or, basically trading for about 5 or 6 hours in total. But because everything is on the higher time frames, it's not always, don't have to be super active. We're able to back test on the sessions in between, answer questions, pretty much do a little bit of everything while we're waiting on certain setups to happen.
Okay. And I know Derek said that he goes across every time frame. He's got every time frame that he looks at. Are you the same?
I don't look at the smaller time frames too much. I really like the major or main confluences to be on the 4 hour daily or weekly. I would say those are the main timeframes that I stay on.
And have you got like a sort of record of all the trades you've taken, timeframes the trades are on, all that sort of thing, to then go back and, I suppose, review and see if, oh, look, we keep getting winners on the 5 hour time frame. More, I suppose, the problem with you guys is you got a 90 to 95% win rate, so it's hard to work out what doesn't work. But are there any stats around this that you sort of keep a log of?
Not necessarily. I mean, Derek definitely goes a little heavier with the 3 hour, 5 hour, 8 hour time frame than I do. I typically tend to stick to more of the traditional time frames. But there are times that something looks better on the 5 hour than it does on the 4 hour, or even just that 1 hour, because that 1 hour changes the whole moving average location, where a trade that's lining up good on the TDI might not look good on the 4 hour, but then you switch to the 5 hour and you could see that it's actually coming to an area that makes a lot of sense. So sometimes even that 1 hour difference, 3 hour, 5 hour, the TDI and the RSI placement can make the difference between taking a trade or not taking a trade.
Okay. Now I'm going to sort of jump back a little bit and then forward rather quickly. But so talking about, I suppose, what's quite interesting is to find out how you overcame the capital aspect of trading, so i.e. getting some capital to trade with, and or making that shift from paid employment, which I know you said you had a job beforehand, to going full-time trading. I mean, how did all that play out for you? So getting the capital and deciding on going full-time.
Yeah. So I had the last job I had quit was about a year ago. So it's been about a year that I've been mostly full-time. When I first quit my job, it was like when I had first gotten a funded account before I even got my first payout. I got the funded account. Like I was able to trade before I went to work when I was a delivery driver for Amazon. So like as soon as I started to pass the prop firm challenge, and I was like a week or two into it, like still a couple of weeks from getting paid, and I was already like, oh, I'm quitting the job. Yeah, definitely a little bit early. I wouldn't recommend that.
Yeah, job must have been miserable.
Yeah, I was just happy to get out of that. But even after that, I pretty much did some side jobs because I was always 100K funded. So, I mean, since then, I've flipped through a couple different 100K accounts, but now I've been on the same 100K account for 3-4 months now. But I've pretty much always gone the route of funded, through a prop firm. I found that was, for someone who didn't have 30,000 just sitting around 40,000, I think it makes a lot of sense.
Okay, so
I'm definitely looking to increase that.
So you got 100,000 in funding, and that's been enough for you to be, with a 90% success rate and a 3-to-1 risk to reward is obviously enough every month to make a withdrawal from that, which is awesome. Now, if we had to sort of talk about like what do you think made you different from other traders out there? It sounds like you have got a different angle than what a lot of other people go into it with. What would you have sort of put it down to? What would you put it down to?
So I think some of it has to do with just my personal drive. I mean, I have 3 young children. I have a 1-year-old, a 2-year-old, and a 3-year-old. So,
and you quit your job before, and you quit your job when you got Amazon. Have you got a partner who works, or
no, she's pretty much been a stay-at-home mom ever since she had kids. I mean, it was just kids back to back, basically. So I think that created so much pressure on myself that I was working jobs, 2 jobs at times, back-to-back jobs, that as soon as I was able to see the light at the end of the tunnel with trading, I was so driven and so motivated I think that also helped me follow my plan and risk management and things like that, where once I really saw that was within grasp, as I got funded and then, working towards a payout, able to see that this could really be an end to just all those hours, not being able to see my kids grow up, I really had a strong drive to make things work and be able to spend time with my family. And I think I really stuck to the plan a lot. When it came to Derek's strategy, some people come across a strategy, they try it for a week, They try it for a month. They try it for a couple trades, and they're like, "Oh, this is just like anything else." I think what set me apart from so many other people that say have watched Eric's course or try to trade his way was just I stuck with it, month after month, week after week, that it's just been so long that I haven't turned my back to it. I haven't really strayed away from the strategy either.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot. And why do you think that is? Why do you think you managed to stick with this one versus like going, I had a couple of bad trades and I'm going to look for something else? What was the difference here? There's got to be a difference, right? And I think other people might learn from this.
Yeah, I think it's hard to describe it because there's such an industry standard. There's such this standard of naked trading is the right way to trade. If you're using indicators, you're like an amateur, you don't know what you're doing. It's such a stigma, I would say. And I found that this strategy, because again, it's going to sound so like cliche or whatever the word is, but it is like a holy grail of strategies that if you are patient, you stay disciplined, and you wait for your confluences and your timeframes to line up, you are almost guaranteed to win. Not 100% guaranteed, but again, we've been maintaining a 90% plus win rate over the series of months. And I think Derek's going on like a year or so of maintaining a 96% win rate. And I don't know anybody else in the industry that can do that, especially people that don't use indicators. Because I feel those indicators make all the difference, because I can look at that TDI and it will stop me from taking trades that I normally would have taken in the past, just because, it's bearish and a support might become a resistance, where now it's, there's a combination of 3 indicators. There's a specific way of using trend lines. There's multiple time frame analysis. And I don't understand how people don't use indicators, or how they even do as good as they do without it. It literally helps me weed out the bad trades.
Yeah. I mean, I tend to agree. I mean, I look at indicators as well. And it is definitely like, if I didn't have them, same kind of thing. I'd be, I mean, I can see when I take a bad trade, I can see that like why that trade didn't work out. And I immediately know, and usually because if it's on a lower time frame, I'll be like going, I immediately know why this trade's not going to work out now. And I get, at that point, I know I should just exit, and I'll end up, usually I'll let it hit the stop. Anyway, one thing I did want to ask was, and you don't have to answer this if you don't want to, but difference between your last paycheck at Amazon and your first payout on the funded account. What was the difference?
So at Amazon, I think I was doing around, I want to say 3,000 a month, or a little over 3,000, like barely skating by. And my first payout was almost 8,000.
Whoa. That's crazy.
So yeah, it was definitely like almost double. And the amount of hours I was putting in was so substantially different that it just made it so much more worth it to just trade over, something else. And this is just the beginning. I look at it as I'm still like, this is basically my 3rd year of trading in general. So I know that, I look at Derek as somebody as where I could be in a couple more years, as he himself has also just slowly gotten better. And even, he went from maybe a 90% success rate a couple of years ago to being like 96% now.
Yeah. So and he said that you didn't take that trade that he took and lost, or you went on the stream or something, you didn't take the trade. So that's where he's like putting you almost above him in terms of how good you've managed to get. Now, talking about our mindset thing, I mean, did you have any mindset issues around, like, talk about patience, around holding trades, or anything like that? Did you have to get frustrated at all at any point, and you had to sort of get yourself in the right mindset? Like, I mean, some of the guys that come on the show are doing things like, an hour's meditation before they jump on the charts, having to go to the gym, all that sort of stuff. Do you need to do any of that? What do you do?
I'm definitely big on the aspect of prayer and meditation and the spiritual aspect because I'm also in recovery myself from drugs and alcohol. I mean, in my past, I was a drug addict and an alcoholic for basically 10 years of my life. And now it's been a couple of years that I've been sober. And I found that there's such a relationship between the type of personal growth you have to do as somebody who's in recovery compared to somebody who's trying to become a profitable trader. The aspect of being disciplined, of, you have to do what you don't want to do. We want to be in trades all the time, but it's not good for us. We're going to lose money. There's so much of a relation. And I found that, spirituality was a very big part of my recovery. And I found that the same thing in trading. It helps me definitely stay balanced and stay centered. And the aspect of helping other people is also very big, that I feel in turn helps myself quite a bit.
Yeah. Yeah. Now, one thing I'd like to ask is, what about if you had to give a bit of advice for a retail trader who's struggling, what would that advice be?
I would definitely tell people to get introduced or start to learn how to use indicators, because like I said, I think it's such a self-destructive or such a bad thing in this industry that people talk so bad against it, but yet it does so much good for people. Like, if it can increase your win rate, help you find better trades, why would you not use it? Why would you tell somebody not to use it? Because I know early on in my journey, it was like shunned upon. I just noticed everyone I was watching, they're like, oh, I don't need indicators. Like, it's going to cloud your chart. You won't know what's going on. People that use it, they're fake mentors. All this stuff that I found out, like, now that I'm doing so good myself, I'm like, why do people say these things?
Yeah.
So I would say don't get stuck up, don't feel that you're above using indicators.
Yeah. I suppose indicators, unfortunately, can't defend themselves, and they haven't got a voice. So it's easy for them to get a bad rap, and it's, I think it originates from the moving average crossover. I literally think that's what it is. I think people are like, moving average crossover doesn't work, and therefore all indicators are bad, which, I think there's a case for them. I definitely do. Now, we're going to run through some quick fire questions here, and then we're going to wrap the show up. So how long did it take you to go from newbie to consistently profitable?
About 2.5 years.
What's your favorite entry setup?
I would say a hidden divergence on the 4 hour. So going with the trend, a hidden divergence where it's a level of either resistance turned support or support turned resistance. And I only take hidden divergence with the 50 moving average. So going with the trend, I can expect that if I'm getting in a higher low, that I'm going to take the trade to the next high or the next low if it was a bearish trend. So those type of trades get the best risk to reward because you're taking it past structure. You're taking it to a new high or to a new low. So I find those tend to be the best trades.
What's your recommended trading book or resource?
Probably Trading in the Zone by Mark Douglas.
What about do you want to walk us through the worst ever trade you've had?
The worst ever trade. Yeah, that's essentially been an instance of where something was, I don't remember the exact pair, but I know there's been a couple instances of this type of setup happening, and I had gotten caught up in them a couple times earlier on when I was learning this strategy. Was when something looked really good on the 4 hour and say the TDI was a massive shark fin. So extremely oversold. This thing is coming up. It's coming up to a moving average. It's oversold. It's at a resistance. But on the daily time frame, it's coming off of a trend line and a whole nother moving average down low that was explaining why there was such a massive push up. And I would trying to short it because, I saw the shark fin, figuring price was just going to react because, 2 or 3 different things lined up. But I learned that 2 or 3 confluences doesn't always beat the higher time frame if it's going against you. that weekly or daily definitely trumps over whatever you see going on the 4-hour chart.
Yeah.
So essentially repeatedly trying to sell something that looked good on the 4-hour, but was very bullish on the daily or the weekly.
Yeah. I hear you actually on that, because I've had similar experiences where it's like, oh man, this is the perfect setup. It's like literally picture perfect. And exactly the same thing happens. You get smashed in the face and go, how did that not work? And it's high time frame stuff every single time. Now, if you could leave our listeners with one piece of advice, what would it be?
I would say it's so important to be patient in trading. And I know people say that, but I realized in hindsight, after the years that have gone by and the blown accounts, was always trying to make it too fast. And I didn't seem to realize that if you lose your money too fast, it takes you out of the game. Then you have to sit on the sidelines, and that demo trading doesn't hold the same value. That even if you're doing a prop firm challenge, I feel that is much better, because a lot of people do treat that as if it's real money. So whether it's a small live account or even a small prop firm challenge, that either of those is better than just a flat out demo account, because the emotion isn't there. So if you blow all your money and you blow your account in your first 3 days of trading, you got to wait for your next paycheck, and now you're trading demo. And I realized that I didn't progress trading it all that way. So taking it patient, like being patient, taking it slow, and really keeping that leverage down, because you won't regret using lower leverage, using a smaller lot size, but you will regret using too high of a lot size to where, you can't even hold to your stop loss type of thing.
Yeah. Gotcha. Great advice. Now, before we wrap up, what's the best way for traders to get hold of you?
Either through the website, which is tradersociety.com, or on Instagram. My Instagram handle is the Joe Caruso.
Awesome. Well, look, a big thank you to Joe for sharing with us today. Everything we've discussed here, along with all the links he's just mentioned, are in the show notes. To find them, simply search for Joe in the search box on tradingnut.com. Until next time, wish all my listeners trading happiness and success. All right, folks, there you have it. Interview done and dusted with Joe. Now, do remember we shot a video afterwards where he breaks down the trading strategy they use to get that 95% win rate. You're also going to see the MyFX, but proof, the sort of before and after, like last time we had Derek on, and then all the way up to what we've got now with Joe. The track record just continues. All right, folks, do remember, hit subscribe, like, and that notifications bell while you're clicking around down there, finding the show notes. And also make sure you subscribe to that Telegram channel, because we got something new hitting very soon. All right, folks, thanks for watching. Thanks for listening, and we'll see you in the next one.